Hello and welcome to this video. So in this video, we are going to learn about break-even point. So first, we will understand what is the meaning of break-even point. And next, we will learn how to calculate the break-even point using a few examples and a question. All right. So without any further ado, let's understand what is break-even point. So break-even point is the point at which the total cost equals total revenue. That means it is the point where there is no loss or gain for the business. So when you are calculating the break-even point, it tells you in amount and even in units that you need to sell. That will be the minimum amount that you need to sell so that if you are not able to gain profits, at least you won't have to face any loss as well. So it will be an equilibrium condition for you where there will be no loss, no gain. Your total cost will be equal to the total revenue. Now, when we are talking about break-even point, we need to understand how do we calculate them, right? So the first thing that comes is PV ratio. Okay, that's profit per volume ratio. So how do we calculate this PV ratio? PV ratio is equal to contribution by sales into 100. Okay. Now, when you will do this calculation, you will get the PV ratio. Okay, I'll show you an example so you don't have to worry what is contribution, what is sales. I'll give you an example and you'll be able to understand it very nicely. Now let's come to break-even point in amount. So if you want to calculate the break-even point in amount, how will you do that? So break-even point in amount is equal to fixed cost by PV ratio. Okay. So if you do this calculation, you will be able to get the break-even point in amount. Okay. Next is break-even point in units. So how to get the break-even point in units? It's very easy. It's fixed cost divided by contribution per unit. All right. So these are the basic formulas that you need to know whenever you are talking about break-even point. The first one is PV ratio, which is equal to contribution by sales into 100. And the second one is break-even point in amount, which is equal to fixed cost by PV ratio. And the last one is break-even point in units, which is equal to fixed cost by contribution per unit. Now let's discuss an example to understand this better. Okay. Now, for example, sales is 3 lakh. Okay. Variable cost is 2 lakhs. All right. Now you have to deduct variable cost from sales. That means sales minus variable cost. This will be 1 lakh. Right? How do we get that? Sales minus variable cost. Okay? This is your contribution. This becomes your contribution. Okay? Next, your fixed cost is 60,000. All right. Now you have to deduct fixed cost from contribution. How are you getting this? Contribution minus fixed cost. And here you are getting 40,000, right? This is your profit. Okay. Now you want to calculate the PV ratio. So how will you do it? Very simple. PV ratio equals, it equals contribution by sales into 100, right? So let's do it. Contribution here is 1 lakh. And sales is equal to 3 lakhs into 100. This will give you 33.33%. Okay, so your PV ratio is 33.33%. All right. Now let's come to break-even point. Okay, in amount. So how will you do that? Break-even point, BEP, break-even point. Okay, in amount. All right, let's see. Break-even point in amount is equal to fixed cost by PV ratio, right? So this will be equal to, fixed cost here is 60,000. PV ratio is 33.33. So we will have 100 here, right? And this will give you 1,80,000 rupees. Okay. So basically we need to write the rupees here. Okay. So this will be your answer. Okay. So here we have calculated the PV ratio, which is 33.33%. All right. And we have calculated the break-even point in amount, which is 1,80,000. So you have to sell for 1,80,000 in order to reach a situation where your total cost will be equal to total revenue. That means a situation where you won't have any loss or gain. Okay. Now we will understand how to calculate the BEP, that means break-even point, in units. Okay, so for that I have another question. All right, so here's the question. Here we have the rupees per unit for raw material, direct expenses, chargeable expenses, variable overheads, fixed overheads, okay, which is the fixed cost. Okay, this fixed overheads is basically the fixed cost. Okay, and total cost per unit, selling price, and profit per unit. Okay, so now here you have to calculate the break-even point in units. Okay, and this entire table shows you the breakdown of cost per unit at an activity level for 10,000 units of Fun School toys. Okay, is given above. Okay, so basically 10,000 units total we have, and here we have the cost per unit breakdown of 1 unit. Okay, now let's proceed and let's start our calculation. Okay, now first thing is, if we want to calculate break even point in units, let's see what exactly do we need. Okay, we first need fixed cost, right? Fixed cost, and we need contribution per unit. Okay, we need contribution per unit. Now let's come back to the table. Here, do you see contribution per unit? No, right? There is no such term as contribution per unit. That means you have to do calculation to get contribution per unit. So how do we get the contribution? Always remember, contribution equals sales minus variable cost. Okay, always remember this formula. Okay, here in this table we don't have such term as contribution per unit, right? So we are going to calculate it, and how will you do that? You will deduct variable cost from sales. Okay, and this will give you the contribution. So now let's start our calculation. So first we have selling price per unit, right? Selling price is 32. Okay, now let's talk about the variable cost. Okay, you have to minus, I'll just write it as less, okay, because we are going to minus it from selling price, right? So less variable cost per unit. Okay, so let's see what comes under variable cost. The first thing is raw material. Okay, next direct expenses. All right, next chargeable expenses. We'll write the amount later. First let's write down the things that come under variable cost. Okay, and finally the variable overheads. Okay, they all come under variable cost. Now let's write their amount. That's 10, 8, 2 and 4, right? Raw material 10, direct expenses 8, and then chargeable expenses is 2 and variable overhead is 4. Okay, so this will give you 24, right? Now you have to deduct 24 from 32, isn't it? So this will give you 8, right? So here we have done sales minus variable cost. So what is it? It is the contribution per unit. Here we are talking about everything in per unit, right? So you got the contribution, which is equal to sales minus variable cost, and here the answer is 8, right? Now here your fixed overhead. Okay, your fixed overhead is 6. 6 rupees is for 1 unit. But here how many units do you have? You have 10,000 units, right? So what will be your fixed cost? Write down here. Fixed cost is 10,000 units into 6 rupees, because for 1 unit it costs rupees 6, right? So for 10,000 units it will be 60,000, right? So now you have contribution per unit. Okay, you have fixed cost as well. So will you be able to calculate the break-even point now? Yes, of course. It will be 60,000 divided by 8, and this will give you 7,500 units. That means you need to sell 7,500 units to reach a situation where there will be no gain, no loss, where total cost will be equal to total revenue, a break-even point. So that's all about break-even point. I hope you all have understood. See you all in the next video. Thank you so much.